Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 17th of May. Aussie jumps on RBA minutes. Overnight, Aussie dollar surged after the minutes of the recent RBA meeting showed that while the board lowered the benchmark cash rate by 25 basis points to 1.75%, some officials wanted to remain on hold and wait for more information before acting. Investors interpreted this development as a sign that the bank is unlikely to hit the easing button again at its upcoming policy meeting in June, as officials may want to assess the impact of the May rate reduction first. We agree with that assessment, and we believe that the nation's strong jobs market and the upcoming federal election in July are additional factors that may lead the RBA to take the sidelines for a while, something that could take off some selling pressure from the Aussie in the near term. Nevertheless, we believe that the RBA's latest downward revision to its CPI forecast for 2016 is a strong sign that further rate cuts may be on the cards in the foreseeable future. Inflation is now expected to remain below the lower bound of the bank's target range this year. Given the bank's easing bias, the soft Chinese data for April, and stronger greenback weighing on dollar-denominated commodities, we expect Aussie to continue trading south in the longer term. As for today's highlights, during the European day, the UK will release its CPI data for April. The forecast is for the headline rate to have remained unchanged, while the core figure is expected to have slowed somewhat. The difference in the forecasts may reflect movements in the prices of volatile items such as gasoline. Even though expectations are for an unchanged headline rate and a slowdown in the core figure, we see increased upside risks to the forecasts. We believe that the national living wage introduced in April may have boosted the overall price of labor in the economy and thereby the general price level. This is also supported by the Market Services PMI report for the month, which showed that the rate of input price inflation hit a 27-month high. As a result, a possible acceleration in the headline figure or an unchanged reading for the core rate could reverse some of the pound's recent losses, at least at the release. That being said, we would be hesitant to trust any pre-referendum data as an indication of the Bank of England's future rate path, as bank officials recently reiterated that economic indicators received in the run-up to the referendum may be less informative and will therefore be treated cautiously. In the US, the release of the CPI data for April is the event likely to attract the most attention. The headline CPI is expected to have accelerated somewhat, while the core rate is forecast to have slowed slightly. The discrepancy in the expectations may be explained by the higher oil prices providing a boost to the headline figure. A modest acceleration in prices is supported by the ISM non-manufacturing PMI for April, which indicated that prices rose for the first time in 3 months. While we don't expect this to be material effect of the expectations for the next Fed rate hike, amid softer data for the first quarter, an acceleration in the CPI on top of the strong retail sales for April could suggest that the US economy may be regaining some momentum. We have two speakers scheduled for today: San Francisco Fed President John Williams and Dallas Fed President Robert Kaplan. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.